Jason Brown here, coming live and direct for Personal Finance Fridays. I wanted to just jump on and talk about, at least every Friday, at least that's my goal, really talking about personal finance, because I'm an investor, I'm an options trader, and a lot of questions we get, or that I get, that I see coming in through email, a lot of those questions I think are a result of not having your personal finances locked down. And I started to think about, like, what would happen if a person made a ton of money in the stock market, made some of the money that we make, but they don't have their personal finances together. So I started to think, what would happen if you started to make the 30s, the 40, the 50, the $100,000 months in the stocks and option market, but you didn't have your personal finances in order? And what I realized is, when I start thinking about, like, how did I get here? Having my time, having my freedom, and just being free throughout the day, and money working for me and all that good stuff. And when I zero in on what was important in getting on this journey, it goes back to personal finance. If you can't take any calculated risk, it's typically because of one thing, is that typically what we do is we go into debt too soon. So we start buying clothes, we start buying cars, we start buying all this unnecessary stuff. And what happens is, when you really back it down and figure out, like, why most people don't have the money to invest, they don't have the money to take what I like to call calculated risk. Because some people get the game confused. Isn't this gambling? No. Gambling is when you go somewhere and you place a bet. Okay, that's a bet. We don't bet. We strategically put capital to work, and we look for calculated risk. We use probability and statistics to figure out what the outcome is going to be. So there's no guessing, there's no hoping, there's no praying to the gods. This is something that you're doing, and it's actually more calculated. But what I find is most people can't take calculated risk because they in debt. They owe everybody. They owe. First, they owe some people owe Uncle Sam. They behind on their taxes, or they waiting for a tax refund. That's the only extra money they go get. The second person that most people owe is a guy named MasterCard. Okay, and if they don't owe MasterCard, they owe his wife Visa. You know what I'm saying? And if they don't owe MasterCard and Visa, they got a couple of problems with their cousin American Express, if I'm making sense to you, right? So most people can't take the calculated risk and get into the stock market because they have so much debt and they owe other people. And let me ask you this question. Let me pose it this way. So I want you to think about it like this. When you think about, like, your job, and if you get stressed out at work and people get worried about getting fired and stuff like that, I never really worried about getting fired or laid off when I had a job, because I always kept my expenses super low. And so, like, even though I had a job that I got hourly and commission, I never needed the commission because I based my hourly off the lifestyle, where I had friends and other people who would, like, buy the biggest car they can get, biggest house they can get. And the moment that they miss hitting a commission month, they was like, oh man, what I'm gonna do? Like, I needed that commission check this month. And I'm like, I actually never needed the commission check because I always based my lifestyle off the hourly that I made. But what that allowed me to do, to bring it full circle, when I talk about how did I get here, it brought me full circle because I was able to take the calculated risk that most people weren't able to take because I didn't owe anybody. I was never worried about missing a car note, missing a house note, anything like that, because before I bought the house, I just stayed in an apartment. I was like, I'm not going to buy a house that I can't afford. Before I got the Jaguar that you guys see, like, I didn't pay for that. Either the stock market or the business paid for that. Like, I didn't pay for that car. But most people will run out and want to get the car and look rich. They want to look wealthy. They want the big house. They want to look like they're getting money. And the problem with looking like you're getting money is when you start peeling back the layers, you start realizing that these people aren't enjoying the house. They aren't enjoying the car because they're looking good on the outside, but they're dying on the inside. And so when I look at where we're at today, and I look at the opportunities that's afforded to us, to when you see, like, you guys see some of the trades we post, and that's never to brag or boast, but I post the trades because I'm like, when I learned this industry, I said I was going to share with people how it really works, because nobody was really sharing it with me. Like, it was like the secret society of how the stock market worked. And so when we share the trades and you see, like, okay, I think one of the trades we put 100,000 up and we made 50,000. And another one we put 120,000 up, we made 140, 150,000. When you see those numbers and you think, well, how's he able to do that? It's because we don't owe anybody, right? And so it's not like we're playing with the house money, the car money, the rent money, or anything like that. We just never really got into debt. And when we were in debt, I made a strategic decision for us to pay that stuff off and be done with it, so that way I could take calculated risk without putting my family at risk. And most people aren't in that position. They rather buy Christmas gifts. They rather shop. They rather, one of the most, I think one of the famous saying from most broke people is, I work hard, I deserve this. That's just something you tell yourself because you want to feel good about the bad decision you're about to make, right? I work hard, I deserve it. That still don't mean it's not a bad decision, right? It's typically a bad decision if at the end of 30 days you will owe somebody else and you're not paying yourself. Typically a bad decision. I don't care if you worked hard to make that bad decision or not. It's typically a bad decision. And so if you want to take anything away from Personal Finance Fridays, is put yourself in the position where you can take calculated risks, and so that your money can work harder for you than you ever could work for it. So that's what I want you to take away from this, because when you get into this game and you start to make real money, like serious six-figure, multiple six-figure income, if you don't have that base, if you don't have that foundation that you're a person that doesn't get into debt and that you can handle your own personal finances and that you use credit cards and you don't let them use you, what does that mean? Like, everything I buy, I put on a credit card, but I turn right around and scratch a check to the credit card company. But why do I do that? I do that because I get so many reward points, right? Then I take the reward points and you come over and you see the big screen TV and you like, he getting it. He got a big screen. It's like, I had so many reward points. We made them buy the big screen TV, right? So you use them. Don't let them use you. How do they use you? They tell you low monthly payments, right? Because you can't control your desires. You got to have it now. You worked hard. You deserve it. So you have to have it now, right? And so what you do, you go charge it. You go put it on a credit card. They tell you it's okay, low monthly payments. You end up paying 2 to 3 times more for whatever it is because you just had to have it now because you deserve it. And then when somebody like me pop up in your Facebook, on your YouTube, and your Instagram, and you finally have an opportunity to come your way, then you like, people go look back through some of the posts. People be like, how do you get started if you don't have any money? Listen, a wise guy once said, if you find yourself in the hole, stop digging, okay? That's credit card debt. That's cars you can't afford. That's houses you can't afford. That's all these designer shoes and purses that look good, but you're really broke. You find yourself in the hole, stop digging. That's how you get involved with the stock market. You stop digging. You stop racking up debt. You take control of your personal finances. And then you start to say, how can I take calculated risk to have my money work for me instead of me always working hard for it? So that's the game plan. Make sure you guys are checking out. I did a whole podcast about this stuff. So make sure you swing on over to thebrownreport.com. Check out the podcast. I did a podcast called What You Have to Say Yes To in order to be successful in this industry, and what you have to say no to be successful in this industry. And trust me, you're going to have to say no to some stuff like TV. You're going to have to say no to credit card debt. I'm not going to spoil it, but I want you to swing on over to thebrownreport.com and then check out that episode. You can also listen to it on iTunes. But this is Personal Finance Fridays. I'm signing off saying, stop digging the hole and get it together. Get it together. Put yourself in a position where you can take calculated risks.